Twitter shares jumped in after-hours trading yesterday as a new SEC filing by Elon Musk would seem to indicate he's moving forward with his takeover of Twitter. The filing shows Musk is upping his commitment to $33.5 billion. That's an additional more than $6 billion in equity. Twitter shares are up a little less than 6%, around $39 right now. Let's bring in Mark Mahaney. He's Evercore ISI's head of internet research. Mark, does this indicate a new seriousness to you, or just a clearer path of how he hypothetically would get there?
Good morning, Kelly. I think the market's got it right. It indicates a new seriousness on the part of Musk. It increases the probability that the deal gets done. He could always, well, you would assume that he was going to get the financing for this. The question is whether he was going to potentially try to walk away from the deal or potentially try to negotiate a much lower price. The latter one seemed to be what the intention was. But showing that he's got that he's willing to put the time in to get the equity financing, which is just a matter of if, not when. But having put that, or matter of when, not if, having put that together, it looks like the probability is much greater than it was 24 hours ago.
Are you surprised in the wake of the disastrous results from Snap last week and the way that Twitter traded down on that he isn't doing more to try to, renegotiate that price, or maybe the market already thinks that price is not going to be $54.20?
Well, let's see. He's come in with a mindset that the advertising model should be changed at Twitter, or Twitter should be much less dependent on the advertising model. So, and he may well think this is exactly why, because the read-through from Snap to other players is that advertising is more volatile, certainly more volatile than a subscription business. I think it's fine on its own, but nonetheless, since he didn't buy it really for its advertising business, the fact that it's proving to be more volatile is probably a good reason for him to try to overturn or overhaul the business, the revenue sources, at least the way he's talked about it in the past.
So you think what happened at Snap actually empowers him?
Maybe. I don't know. I think it just justifies his argument that he wants the business to be less reliant on advertising. So I think that's the real take. And I think the read-through from Snap is negative. I think you've seen two areas. Brand advertising is almost always the first to get cut in a recessionary environment, and especially revenue that goes to kind of the smaller tier platforms like a Twitter, like a Snap, like a Pinterest versus the Googles and the Facebook. Twitter's always going to be in this position unless they can come up with a materially better, more sustainable revenue model like subscriptions. The open question is just how big can a subscription model be for an asset like Twitter? That's an open question, but I think we're going to try to, Musk wants to try to figure that out over the next several years.
How important is the performance of Tesla, which, again, we would think at some point, whether it's Tesla or SpaceX or, the equity, the funding has to come from somewhere. So how important is the share price of Tesla, which is still hanging on to almost a 2% gain pre-market?
It's obviously very important for him to put together the equity financing for something like this. I think he's shown already, though, that he's got a lot of sources. He's got friends with large pockets, or he's got a lot of other sources. There's a very large bank consortium behind him that'll help him put together this deal. So I think the financing really isn't that much of an issue for the world's richest person. It would help him if Tesla stock sustained or went higher, but I think he can do it with or without outperformance in Tesla stock.